Okay, now you say clearly FTX did not play by the rules. That is unclear to me, not because I am disputing any of this. It's just like I don't even follow. Like, so they're people are buying crypto there, but then there's also like all these different sort of like you say, derivative ways in which to buy it so that I can leverage crypto I don't have to buy more crypto. And this encourages what? Like I heard stories of, I know somebody whose brother was walking his dog in LA and somebody just came up and here's like 50,000 US dollars worth of crypto as a way of making the crypto valuable. A, is stuff like that true? And B, like, why was there something about FTX that was trying to create value in currencies, in crypto coins that didn't exist? Like they were trying to create it from whole cloth.
Yeah, so a couple dynamics going on there. The first is it's true there was more risky trading happening on FTX by the design of the platform, but that's not really where things went wrong. Like you said, what FTX was doing and what a lot of crypto companies do was this really sneaky type of accounting where they basically create their own token. For FTX, it was called FTT. And it's almost like stock in the company where the value of it increases as the overall value or perceived value of the company increases. But FTX was actually using this token as collateral and accepting it as collateral. An example of that would be like, for example, if you did margin trading on TD Ameritrade, so you were trading with money you didn't have, and then as collateral, you're putting up stock for TD Ameritrade itself. Obviously, it doesn't really make sense. The other thing that FTX was doing was it wasn't only FTT. They were also basically pumping up the prices of other tokens, more obscure tokens that they're investing in. And worst of all, they had this affiliated proprietary trading fund or a hedge fund called Alameda, which was basically all Sam Bankman-Fried's money. He owned 90% of it. And Alameda was allowed to do whatever it wanted on FTX with no limits in what's called a type of God mode. And that's basically where this $8 billion hole happened, where all of this customer money just disappeared.
All right. So I want to just go back and explain to people what you said about like giving the FT Ameritrade example. So if I'm buying something on margin, it's basically I'm borrowing money to buy a stock. And the idea is that I'm hoping the stock is going to go up. I'm going to be able to pay off the loan and I'm going to be able to make the delta there. But I can't just borrow money without having to give some collateral. And so I'm giving the collateral I'm giving in the case of FTX is basically something that sort of creates value in FTX. If FTX says, we will take FTX shares as collateral for actual money that you borrow, then it increases the value of FTX shares as long as we stay in that universe. Right? I mean, that's basically, I mean, that's sort of like what currency is all about. The reason why the American dollar has value is because the US government will only accept American dollars for your tax payments. And if you don't give the tax payments, they're going to put you in jail. And so that's how the value of that currency is established ultimately. And that's sort of traditionally been the way that it works. I think the Romans did that when they would conquer a land. Here's some Roman dollars, as it were, and we'll recollect those in taxes, but now our soldiers can use it as a way of buying your goods. But they were just sort of, it was just sort of almost like musical chairs, right?
I mean, the real problem is the idea with collateral is if I can't actually pay for the bet or the trade that I'm making, then the exchange that I'm making the trade on can take the collateral that I put up, which is usually going to be in some form of fiat currency. But if I both can't pay for the trade and also the collateral I've put up is the exchange's own funny money, then if they do the margin call, if they come and ask for their money, then it doesn't exist. And this is basically what happened with this hedge fund that was really just themselves, where the hedge fund was putting up its own currency as collateral. And I want to say, like, this is intentionally confusing. I don't think it should really make that much sense. It's all fairly ludicrous.
And just going back to the different kind of trading platforms like Coinbase and FTX and the differences between those two. I mean, it seems like FTX was especially risky, but what is inherently different about it as a trading platform that made it so?
I mean, first off, I would say the main focus of it was engaging in this type of margin trading, which is basically doing derivatives trading where you're betting on things like futures with money that you don't necessarily have. So you're taking out loans against the platform. And that's, again, what Alameda, this hedge fund, was doing, which is really where FTX ran into trouble. The other thing is FTX was incorporated, or it was a Bahamian company. So even though there's no regulation in the US, there's, I would say, even less in the Bahamas, even though they do have this set of laws they had created to attract companies like FTX. And what that means is when FTX was doing things that are a big no-no, like commingling customer funds with their hedge funds' money, that's something I think you can be assured that a public company in the US like Coinbase wouldn't be doing.
It may be too early to tell this but is it your sense that like this was plotted out in advance, or just like the ball starts rolling, you're trying to keep it from falling off this ledge, so you create another sort of like ramp over here, and then when it's about to fall off that ledge, you create another ramp going that way, and all of a sudden you've got this sort of like bizarro system that has just been developed on an ad hoc basis as to avoid different crises?
That's really the million-dollar question. So as you may have seen, Sam Bankman-Fried, after the collapse, engaged in this very ill-advised media tour where he basically spoke with any journalist who reached out for an interview. And his whole spiel was, essentially, I'm a dumb idiot. I didn't know what I was doing. We had no accounting. This was all unintentional. If you look at the filings that the DOJ made, or the CFTC or the SEC, who have all brought charges, they seem to have a different opinion, which is basically saying this was all very deliberate from the beginning and they knew exactly what they were doing. So this is what we're going to see play out over the next year, or however many years we have with all the court cases that are going to come.
Could he have, despite his either stupidity or nefariousness, could he have pulled this off, or was this sort of inevitably going to fall apart?
It's a great question. I don't have the answer for this. What precipitated this whole mess is he had a friend turned rival who's the head of the biggest crypto exchange that's called Binance, who goes by the name CZ. And Sam had sort of pissed off CZ because Sam had engaged in this tour of DC and being the face of regulation with CZ, who's the head of Binance. It's unclear if he was ever allowed to actually come to DC, if he would be immediately put in handcuffs. Sam sort of alluded to this on Twitter. And then CZ, who actually owned, I think, $2 billion worth of this token, FTT, basically said, I don't have a lot of trust in this. I'm going to start selling it. And that sort of precipitated what some call a bank run on FTX's funds. The other thing, of course, that came out was this balance sheet for Alameda, which is the hedge fund, which showed that a lot of their money was being held in this token FTT, which showed that they weren't necessarily as solvent or as rich or as good at trading as they claim to be.
So, all right, let's turn to the hearings that took place last week. And, I think most of us here, and you may have a different opinion, have been pretty crypto skeptical from day one. Like to me, and maybe you can tell me where I'm wrong. To me, crypto sounds a lot like tulips, or like baseball cards, or some other type of collectible. Like, okay,
it also sounds like a multi-level marketing scheme and a Ponzi scheme all put together.
Yeah, I mean, there's some of that, but I think it's just like it's not.
But they've hoarded the coins all at the top, and then the way to increase the value is to get more people in. That's where it's the MLM.
Yes, I guess that's also the case. You just need to sort of like, well, you could argue the same thing about baseball cards. We just need to convince more people to become baseball card collectors, and the way you do that is like, I held on to these since I was a kid, and now my Mickey Mantle is worth a lot of money. And then other people are like, oh, I'm going to hold on to my baseball cards, and I'm going to buy and collect. And That's the way any collectibles, it seems to me, like increase in their value. Why is it actually not the case that is that wrong assessment of crypto?
So I'll start off by saying that I, of course, an objective journalist, so I don't take a stance one way or the other. But I would say what the pro crypto crowd says is the first iteration of this Bitcoin really came out after the 2008 financial crisis, and the philosophy behind it was this very internet-based libertarian view, which is we shouldn't have a few banks and governments controlling the financial system. The idea is that crypto can be this censorship-free, fully decentralized way of having money that would be essentially run by code instead of by people. And I think there are real use cases for where that makes sense. One, for example, is being able to do cross-border payments, especially to countries that are under sanction. So if you're someone in Iran and you want to be able to have access to money or be able to raise funding for a nonprofit or something, it's a way to be able to actually send money back and forth that's not run by the US government or the IMF. Another is that it
can I just say, there's another way to express that: money laundering for good purposes.
And that's what a lot of senators say. Liz Warren.
I mean, there's an argument to have like a system to money launder for good things, like, you know, helping dissidents in an authoritarian country. But that's what that is. like you're smuggling in like, you know, some type of value system that it's money laundering, right? I mean, that's what that's called. It's just that we don't look at it as money laundering when it goes to dissidents and NGOs.
Exactly. You can say it euphemistically or you can say it not, depending, I guess, on what your view on it is. And then it also reduces a lot of fees for something like remittance payments. If you live in a country where a lot of the GDP is coming from remittances, obviously it's controlled by companies like Western Union or MoneyGram, who are taking huge percentages off the top, and there's no real competition. With crypto, again, the idea is that you have this system that's run entirely by software. There's not necessarily the profit motive, so it creates a better use case. After that, you can get into NFTs and, you know, all of these tokens that I think it's probably harder to make a case for, but I would say the ones that I brought up are more of the philosophical underpinnings of crypto.
But the problem is and I know you're covering this, so you can't be maybe as explicit as us or go where we're going. But if it is a collectible, right, then the entire marketing of it as a currency is fraudulent, basically. I mean, they are duping people into buying something where a lot of people got in really early on, wealthy people who were able to buy up a bunch of cryptocurrency, and they need to maintain the fiction that it's a democratizing currency so that people will buy in on it, and the value of the people, the value of the crypto that people hold a lot of will continue to go up. It's only just really started to crash down to earth quite recently, right?
Yeah, I mean, just by simple supply and demand for something like Bitcoin to continue going up in price, then you have to have more demand for it. You have to have more people buying in. I think speaking with hardcore Bitcoiners or what are called Bitcoin maxis or people who only believe in that would say is, you know, we don't really care about the cost equivalent to the US dollar. We only care about Bitcoin. Or, you know, the idea is just spreading this technology. The value of it doesn't mean as much. Obviously, you can take that as you will, but it is by design because it's a new financial system. You need more and more people buying into it for whatever reason they do.
And I'm also curious too about FTX specifically, when they started really putting their foot on the gas pedal with a public relations campaign, which included Tom Brady, which included other celebrities.
Spike Lee, didn't he do an ad? I saw that Spike Lee ad, and I swear to God, I thought it was a parody.
Yeah.
And then I got to the end and I'm like, wait a second, this is not a joke. This is real. I hadn't seen it when it first came out.
That one's pretty depressing. I mean, Tom Brady makes sense, but Spike Lee, it's a bit sad. But like, it just, was that campaign, I mean, did that align with some of the drama that you described earlier with CZ and with kind of maybe Sam Bankman-Fried understanding that they needed a public campaign in order to maintain FTX before it began to collapse?
Yeah, it's funny. I mean, Sam Bankman-Fried was a very shrewd businessman. I actually went to an event he spoke at DC in October, so just a few weeks before this happened. And he said that all of the ads weren't to bring on more retail customers or more consumers. It was more to increase their credibility with investors and with banks and stuff like that, which I think is probably a bit untrue. But what's more important, I think, is he really positioned himself as the white knight of crypto. So more so than getting Tom Brady or Larry David on as spokespeople, he was crypto's face in DC. So DC has been grappling with how to regulate the industry for several years. And over the past year, Sam really was the presence for the industry in DC and forged relationships with a lot of lawmakers, which has since made a lot of them look not great.
Well, but the regulation piece is key here, right? Which is why they want to be regulated so they can be legitimized, this industry. And my stance is don't legitimize them, kill it now. And that is probably what speaks to what you're saying about his abilities as a businessman, because if he was pushing for regulation, that means that he wanted some sort of guardrails in order to get like the more buttoned up types in Washington to see this as something legitimate as opposed to what it ended up being. And regulating crypto could save crypto. For my purposes, I don't want that. But is that kind of your sense of his strategy on that front, at least?
So I would say that's certainly what critics or skeptics say about crypto. And you saw this when the Senate Banking Committee had a hearing last week. Hillary Allen, who's a law professor at American University, basically said that, which is the only reason that crypto wants new regulations is because they can't comply with the current ones. So it would legitimize them. It would further their ascent into traditional finance, which has already been starting.